All right. So um, today's trade. Let's document today's trade. That's 17th July, 17th July 2025. So, yep, we are here. Yep, we are here. So now I am taking a sell trade today. Taking a sell trade today, and it's just why am I taking a sell trade? Why did I take a sell trade for? Why do I want to sell? So basically, we started using the range trading, candle range theory concept, and now this range is over trading. This is range high, range low, right? So we will see that price swept the range low and then price started pushing to the upside, right? So we can expect that price will get to the range high, right? That's the expectation. So still bullish, right? So now let's deal with the range that is closer to us. Now we come down here to this range, right? This was last week's weekly candle and price swept it already. So price swept last week's candle, price swept it. Now this is the previous weekly candle. This is its high and this is its low. This is 50% of it, and we could see that price swept previous weekly high. So price swept previous weekly high, and we can see that there's some form of rejection. So price is coming inside. There's some form of rejection. So personally for me, I'll be expecting like for price to of course go to the opposite side of the range. First to 50%, that's the opposite side of the range. So I switched to daily, and on the daily, as we can see here, is July 6th, this is July 15th, this is July 15th weekly candle. You can see that price swept it, price swept July 15th daily candle, price swept it, and plus weekly candle. So price swept everything. The price closed inside this weekly range. So this is the weekly range we are trying to trade. After price swept the weekly high and the previous daily high, price closed inside this range that we're trying to trade. The range is from here to here, right? It ranges from here to here. That's what we are trying to trade. So after price swept weekly high and previous daily high, price closed inside this entire weekly range we're trying to trade. So I'm like, okay, I think I would like to sell to first the 50% of the range, then to the opposite side of the range, and then observe what price does from the opposite side of the range, so I can probably take in new trades. So now I checked on the 4 hour. I checked on the 4 hours. Oh, this is, I mean, US daily candle, obviously, US daily candle. So normally, if you are trading the daily range, right, we will not be taking any trades here because price has not swept any side. We're just going to be looking, just observe and wait for price to sweep one side of the range. You're right, they are the high or the low of the range. That's basically it. But now, what made me take this trade? So 1 hour, I saw the that price spiked up, then closed, but this is never closed as a bearish candle. And next is closed as a bearish candle. But anyways, I can see this long week. Then price got here. Now price started to crash back down, right? So I switched to 30 minutes. Now I took my trade based off the 30 minutes time frame. Now on the 30 minutes time frame, I saw that okay, that what we saw on the 1 hour. Then I looked at the 30 minutes and I'm like, okay, okay, okay. You can see that after price came up, right, it crashed. Then there's some form of hula baloo, right? There's a pullback. So I'm like, okay, let's see. Tap, tap. And you can see that price taps to 50% of that swing, of this swing movement, this swing high, swing low, this swing movement. Price taps into the 50% of that swing movement. So I'm like, okay, okay. When price has tapped into the 50% of that swing movement, price here to what? Price. Now remember that there's now a low here. There's a low here. So after price started the swing movement, price came and broke this low. So break of structure confirmed. Now break of structure confirmed. Where would our order block be? Our order block would be this candle, right? So this candle, and then personally for me, one of the things that makes me what would I say? Let me say fuck with the another block is if I see a fair value gap. Yeah, if there is the presence of a fair value gap makes me more interested in another block. So as you could see, first candle and third candle, between the first candle and the third candle, there's a gap. That's fair value gap. Fair value gap confirmed, plus the fact that I already wanted to sell, right? I was like, okay, this feels bearish. So then I'm like, okay, so plotted fair value gap. I drew out my fair value gap. After drawing out my fair value gap, then price was still around here. Then I waited. I waited basically. I waited for price to get to. I waited. I was just waiting. So then, also, I now did another swing high, swing low. This swing trade that happened before you see this pullback. You know that this point is also a swing. It's also 50% of this swing, of this sell, of this crash that happened. Is 50%. So when this one came here, market got exhausted, right? So price got exhausted, and then price came and pulled back. So I put my entry at the 50% of this swing movement. You know, basically I wanted to sell, right? And I wanted to trade off the fair value gap because this week I've been missing a lot of trades. At times I wait for the order block and price does not get to the order block. Price just reacts off the fair value gap. So I'm like, okay, today I think I'll take a fair value gap trade. I'll take a fair value gap trade today. So I decided to take a fair value gap trade, right? Now, this is the FVG, and beautifully enough, as I did the swing high, swing low with the 50, where the 50% of the range, the 50% of this swing movement just happened to be the middle of the fair value gap. So I was just like, oh, that's nice, that's fine. I'll just put my entry here. Here again, I'll just put my entry at that spot, right? Now, price was even kind enough to go below to go above the 50%. Even is, there was a point where in my earlier trading days, I used to take my buys. I used to take my trades when I used to trade. I used to take my trade from in between 50 to 61.8%. The zone in between 50 to 61.8%. That's why I always like to take my trade from back in the day. So see price came here. I'm like, okay. It's something I can work with. I had a pending order to go, it didn't activate. I had a pending order about up here. Okay, that maybe, just maybe price comes to the OB. Maybe, then of course I'd like to take the trade. For price to come to the OB. It just taps the fair value graph and it's like, okay, maybe we should do something with the fair value graph. And here I am just open and chilling down, just chilling. My SL is just at the high because anything that makes price disrespect its fair value graph, it might most probably disrespect the other block. And if it disrespects the other block, it's going to come for a liquidity sweep, right? Most people wonder, oh, why not stretch out your SL? I don't believe in stretching out SL, basically. That's why at times I wait for. That's why at times I wait for. That's why at times I wait for a low or a high to take my trade from, basically. Buy low, sell high. So if you buy low, you can use smaller SL. Sell high, you can use smaller SL. So you buy low, you sell high, right? Trading in the middle, you just have to trading in the middle like that. I just have to cut. You understand? I just have to cut the SL. I just have to stick to what I do. That's why I just make sure that okay, I put the SL exactly at the high. If price decides that oh, I am going to disrespect that um disrespect this fair value gap and disrespect your other block, then it's going to disrespect that high. And usually I don't trade in the middle. But I decided to trade in the middle today, right? And since I'm going to trade in the middle, then there's no point in stretching my SL because if I want to stretch my SL, might as well just carry the SL and put it here. But really, why? I don't really understand why people their traders work. I mean, every trader has different trading mentality, right? Every trader has different trading mentality. So yeah, what works for one man's food and that man's poison, like we say. So yeah, that's it. That was why I took sales today. I just felt like, oh, okay, let's take sales. But I didn't even use my actual lot size. I just freestyled the sell. Just freestyled the sell. So just a freestyle sell. I had another pending order about here. I had another pending order here. Maybe market will be probably be kind enough to come here, touch the pending order, come down, probably. That's all the probability. I mean, something like target market, something like target market. One is just to try and find good trades, I guess. Just try and find a good trade and take it if I can. Just find a good trade and take it if I can. And if I can't, I rest. Yeah, you get to buy, you know. Anyways, that was why I took sales today. And I'm gonna go to bed now and hope for the best. Cheers, guys.